Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It is Monday, the 22nd of October, the start of an interesting week. A couple of big central bank meetings. There's more than just the ECB and the Bank of Canada, but they're the ones that I'm going to focus on. We've also got durable goods and then Q3 GDP from the United States at the end of the week. We've got all the market, pre-launch PMIs for this month. So it's not a huge week and certainly not a big start today with hardly anything, but geopolitics is going to dominate, and President Trump withdrawing from this nuclear deal with Russia has sent the Russians into a bit of a frenzy. They're barking. Have a look at Markets Morning. I've written some stuff on it, remembering that the written bit and this are complementary. Not everything that I write there can come here, and because we're looking at 17, 18, 20 markets in this short 15 to 20 minute period, not everything I write can come here. So please consider them complementary. And if you want to get the best from what I do for you each day, it's reading and then watching this as well. And as a few people say, taking some notes. I'm going to start getting somebody to transcribe them and take notes for myself. Anyway, so Friday night, so that Russian deal complicates things. This Khashoggi thing looks like it's being pushed aside. They're trying to take the heat out of it. The Saudis are saying, heck, we didn't know this was going to happen. It stretches credulity, as you would know, but it looks to me like the Americans and the Saudis are trying to take the heat out, which means that oil doesn't necessarily go up in the manner that it would when the Iranian sanctions bite in a couple of weeks' time. And it does seem clear from what Steve Mnuchin said over the weekend that the Americans are going to push for zero as the amount of imports from Iran. That's obviously going to push them up against India and China, but that's for another day. Just quickly around the grounds, China talked up and likely bought its own markets on Friday after that 6.5% GDP print. That saw the CSI 300 up just shy of 3%, the Shanghai Comp up about 2.5%, but that was lost pretty much on the rest of the world. The UK was up a little bit, even though there's Brexit messiness. We hear today, this morning, that Brexit's 95% done. I'm pretty sure that 5% includes that Irish border issue. I'm pretty sure that what the Europeans have said, May, you need to get the deal over the line Mrs. May, I should say, you need to get the deal over the line in the Commons and then come back to us with something you can do. That's where the issue is. Europe's tried to do a deal, but we've still got that. So keep your headline uncertainty grows for Brexit. The rest of the place, we saw stocks down only marginally, 27.67 for the S&P 500, but that's actually a pretty weak result, all things considered. 2.5 minutes, I better get the skates on. US dollar was a little bit weaker. Euro bounced off 114.30. That's one of the key levels. 6.95, 6.98 to 7 is one of the key levels in dollar yuan as well. The CNH is at 93.5 this morning. We've got to keep an eye on what goes on there. Let's dive straight into the charts and we can talk about what's going on as we move through. Right, so it's Monday, weekly charts. And I will say, I never got a chance to do a special Bitcoin, which I promised one of the viewers. I'll talk a little bit more about Bitcoin at the end of this. Rightio, so the weeklies, what have we got? We've still got a downtrend. Last week's indecision, let's blow that up so you can get a better chance of it. About the same peak, so we had, I should say, a 115.20, 116.20 for the last couple of weeks. 115.20 broke. We got down to 114.30. We've bounced off 114.30 again on Friday night. Why is that important? Because if you just extrapolate that line there, I'll draw it through if you like. Just from these lows, it's only a 2 touch. Now it's a 3 touch. So you can say actually it's better than that. So that's 114.30. 114.30 breaks, you break a weekly and a monthly. Remembering this goes back to a year, close to a year because we're in October. This is a line worth watching. So 114.30 gets you 112.80, 113. Watch the Italy issue. Watch what Mario Draghi says after the ECB board meeting. No expectation of any move in interest rates, but some expectation that he will again talk about, or the board, or the governing council, will talk about the end of QE. That seems to be coming. It should be coming, but how he talks about that when it looks like the sweet spot or the strong spot for European growth is past is going to be an issue that Draghi has to deal with. So watch Euro later on this week. Watch it for the moment. The US dollar without a clear catalyst seems to drift all the time, so we'll keep an eye on that. Dollar yen needs to get up through 112.75 to really kick on. At the moment, you know, you can see that high there. 114.75 is the real key. That's the top of the consolidation zone. At the moment, if you think about where the US dollar is, you wonder what the midterms are going to bring. Are we going to see a pink wave? Are we going to see a young wave or a millennial wave? Are all these people upset with President Trump going to come out and hand the Republicans their backsides? I don't know what's going to happen, but there could be some tension about that given what people think about the US dollar. If that is the case, if stocks do come off, then we will see this back at 110.75 from where it is at the moment, particularly if it can't break on a daily basis, 112.75 and hold above that. In terms of sterling, if I give you the daily version of this, you can see it. Not a very well-drawn chart. Obviously, I don't use these for the daily notes that I write. You can see that it's come back to sit on there. If you look at it on the weeklies, because it is Monday, a failure around 133, which is 38.2%. Retracement of the last level. A rest here on support. A break of 129.90 to me ushers in 129.20. And if 129.20 breaks, I'm talking about 126.60 to 126.80. Where am I wrong? I'm not wrong until 133 breaks. To be honest with you, and close above it. That's just the way the setup is. If Brexit can get a deal done and a deal that helps the population, the citizens of the UK, then that's going to be good for sterling, and I'm happy to be wrong. Not that you're supposed to care about that stuff when you're trading. Aussie, still in a downtrend, but like the Kiwi, trying to build some momentum for a rally. If it can hold above 70.40, which is this low, it can probably rally to 72, maybe 72.5. Now, if you have a look at where this downtrend comes in now. Now oh, sorry, beg your pardon. Remember that's Fed night from FOMC night from back in September. And what have we got now? So we've got 71.90. So that's what I'm saying, 72. You get a squeeze through before it reacts. But we could see that. We have to keep an eye on that. That would be based on US dollar weakness, Kiwi strength, turn in commodities. If stocks go offered, which they look more like they will than they won't, this will run into resistance at 72 regardless. But overall, the downtrend continues, but a slight, very, very slight warning in the MACDs. Remembering that the second signal is often the strongest and the one to take. Dollar CAD, right on an important level in terms of the weeklies. I'm watching dollar CAD and dollar Sing really closely. If dollar CAD and dollar Sing can break, then we are away. Now, I've done my weekly chart scan as usual. What's really interesting about this, if I just quickly summarize, a bit of a segue, is that when I look at the correlations, I see that the Aussie, Kiwi, and Sing are correlated with interest rates from the US dollar. Euro is too, but a little bit weaker. So what the data shows is going to be really important for foreign exchange and other asset classes. The yen crosses are clearly being driven by risk appetite in the stocks. Now, I don't know if you can see that. Where's my thing? Yeah, right. So this is, 35 pages that I do every Saturday. Try and get it done Saturday, often Sunday morning because it's such a big thing. But stocks are highly correlated, and this uncertainty is feeding gold. So a lot of stuff is tying back to US data, US interest rates, and what that means for expectations about the Fed, and that's feeding into stocks. But from my point of view, levels I'm watching, or the numbers that I'm watching are dollar CAD and dollar Sing. If dollar CAD breaks higher, and in this case you can see that a decisive move would be up and through 131.60. So if you see a day close above 131.60, we're back in that trading range. And if I put an old style Greg McKenna, I'm going to struggle to get this done in under 20 minutes today, folks. If I put an old style Greg McKenna kind of approach to it, I'm then targeting 133.80. And heaven forbid if 133.80 breaks, we're looking at 138. Anyway, we've got plenty of time to talk about that. I don't think it's going to happen this week. Now, not sterling. Well, who knows? Is the Kiwi the new sterling? I don't know. Anyway, we've broken out and we've got this little bit of a turn. So 66.60 looks to be a bit of resistance. It's a 23, and then you've got this 68 sort of 10-figure region. It does, just on a pure charting basis, it doesn't make any sense. Except if you think about it, Aussie Kiwi fell out of bed. Aussie Kiwi fell quite precipitously, and looks like it could actually, let me see if I've got an Aussie Kiwi chart. It could actually be falling towards 106.50 Aussie yen. I don't think I've got an Aussie Kiwi. Now, I must say, I am let's just bring one up. I'm hopeless at Aussie Kiwi, folks. If it's not my worst pair, then it's close. Right, let's just have a look. What have we got there? That's the daily Aussie Kiwi. Let's take it to the weeklies. And you can see, so somebody, Henry Cleaver, I think it was, on Twitter suggested that perhaps that's a head, that's a shoulder, that's a shoulder. I just had an uptrend line drawn in there, and it's busted down. And I was thinking of that and this on the dailies as a range. It's about 200 points, as a pennant, I should say. About 200 points. The break gives you 200 points, and from the break to the bottom is 106. And a half or thereabouts. So that's where I came up with that. But Kiwi could potentially continue to rally. I don't trade the Kiwi that often, mostly because I'm an Australian and footy tends to influence me. I always want the Kiwi to go down, so I tend to steer clear of it. Now gold's trapped, but still got a bid on the dailies. It's caught between the 38.2 and the 50% of the last down move. But on the weeklies, you can see that this build, this clear up move that we've been talking about, has started to occur. It's got to get through 1234 in the first instance, and if it gets through 1234, I think that's a turtle level. 1233, yeah, right. So the highest high for the last 10 days is 1233.26. That could kick it through. That's also the highest high for the last 55 days. Now, of course, we saw that just recently, and turtles don't necessarily take the second a signal in the same way, but has it fallen far enough to get them scratched out? Probably not. But watch that. 1234 gets you 1238. 1238 gets you somewhere between 1252 and 1263, which is this kind of trend line up here. So at the moment, it's sort of 1262 to 1265. If stocks go off, which they may, gold's really going to pick up. And that seems to be what the correlations are telling you. If I have a look at copper, if I can find copper, it's stalled. Nothing else much to say about copper other than it is stalled. And we just got to keep an eye on where it goes. If it breaks 286.50, then we can run towards 293. It's got to get through 293 to climb back in this range. If it breaks down through 271, we're back in the 255. So at the moment, it's just kind of caught in a range. In terms of WTI and Brent, WTI underperformed Brent by a serious margin last week. For me, if you have a look at it, you've got an uptrend within an uptrend. And for me, the target is somewhere like 66. I've said 64.50 on the daily because I'm looking at it in a different way. It's 64.40 there, but basically a full round trip. 69.22 has been a reasonable level. If I see a day close below 69.22 another day, then that will signal to me that we're going to go a couple of bucks lower. But overall, it's an uptrend within an uptrend. If 60, let's call it 66.5. Give it some space. 66.5 goes, you've got 64.5, and if 64.5 goes, we're going to be talking about 60 bucks or even lower. Similar story with Brent. I looked at my charts and on the weekend, and I can see 70 bucks. I can see 70, 72 bucks, something like that. Here you can see we've broken out of the range. We couldn't get any higher. We've had this long tail here. We've had this big down day the next week. Then this week we've managed to hold that old support zone. So what do we got? I've got 78.50 as the key on my weekly. Where is it? There it is. Is it there? There it is. Hello, mister. There it is. Yeah, beautiful. 78.50. On that as the key level to watch. So if that breaks, then we really do go lower for gold. Moving on to stocks now. And that's a really messy chart, but I left it there for one reason. This is the S&P. Have a look at it. So this is the old sort of 2008 uptrend that broke and then came back and was resistance. And then the old trend line, resistance, and then that broke. And then this old trend line became resistance, and now we've broken down. Let's blow it up again for you. So what have we got? We've got the MACD rolling over, which suggests lower levels. We've got this big fall and then an inside week. An inside week just tells you that we are struggling a little bit. If you have a look at it on the dailies that I've got on Markets Morning, the written piece, you'll see why it pulled up there. And you'll see it's opened a tiny bit down, but that's early Monday morning. 57.12, which is the low here, is the key for me. 57.12 goes. And futures are 57.59 now. If 57.12 goes, then I'm talking about sort of 55. I'm saying 57. I mean 27. I'm getting my Aussie and US markets confused. If 27.12 breaks, then we've got a substantial move lower to sort of another 100 points or so at a minimum. So we'll see how that plays out. In terms of the SPY, 14.5 minutes, I'll get a kick on. So structurally, it's broken. You know, high. That was 63.45, 55. Remember, couldn't get through. Fell. Range. Collapse. So no point getting too bearish. 57.30 is the low. Pardon me. I apologise for talking about the Aussie market in the S&P a minute ago. So that's an inside week. That doesn't tell me anything. Inside weeks after a big fall like that are very common. What happens now is if the low last week breaks. And the low last week was 57.72. So that's a level to watch. We're at 59.11 as I look at the chart now, 59.04 on there. So that's the level to watch. If that breaks, then we're down at 57.30. So that's an extra 40 points off that. And if that breaks, then all heck breaks loose and we go substantially lower. For me, if I editorialise just quickly, pardon me, there's too many people saying nothing caused this. I think they're the most troubling moves. When you can't pin a reason, I think there was a reason. I think it was China. I think it was rates. I think it was a whole bunch of things. I think it was a recognition that a lot of good news is priced in, and everyone's been buying the dip. How long does that last? You know, maybe when corporate America comes back with their checkbook next week and start buying their own shares again, which I think should be outlawed. If you want to give the money back to shareholders, give them a special dividend. Leave the shares where they are. That's an artificial goosing of the stock. Anyway, while it's law, it's law. So what do we got here in the DAX? The DAX looks like it's in trouble. That's hanging that one. So if last week's low gets taken out, 11,382. Remembering it's closed below 11,7. I've got a target of 10,000 on my weekly chart scan, 11,000 first and then 10,000. So we'll keep an eye on that. Now, quickly, feel free to shut off if you don't want to watch Bitcoin. I just want to quickly go through this. I had a special question. What do we got? If we have a look at it on the weeklies, you've got a nice big triangle there. Theoretically, this should really burst higher. There seems to be some really good bids at or under 6,000 at the moment. So they are staying in the market, pardon me, and unless or until 56.50 to 57.50 gives way, which of course means 56.50 gives way, I'm not going to get too bearish on this. I wouldn't be surprised to see a bolt higher. So what do we see? So that, this is going to get really messy if I put, that's actually the 38.2% retracement of that move there, I think. So what do we got? There are decent moves, 1%, 2%, that kind of stuff. But you're still struggling. There's a disconnect between blockchain and Bitcoin. Bitcoin looks to me like the one that's going to survive. We have to see how it plays out. All it's going to take is regulatory change that says Bitcoin's okay to be traded. More people are setting up exchanges. There's more ways to trade this. So that is kind of a bull point. The fact that there's somebody down below 6,000 is also a bull point. It reinforces the fact that if 56.50 does go, then we could see one heck of a reaction. For the moment, though, you can see here that 7,400 to me is about the top of any potential rally. Now, that's a long way from 65.90 odd, where we are right now. And then above that, if I have a look at my weekly, just excuse me showing you the side of my head. What I've written is reversal after a false break. So I'm talking about the dailies here. And daily broad sideways range since June. Breakout last week saw price reverse to retest triangle, which is what you've got. Support 6,400, below 6,400, 61.23. Resistance at 6,900 and 7,100. So that's about the range I'm playing. From a longer term point of view, if we want to have a look at it on the monthlies, that's a bubble that is bursting, and the MACDs suggest lower, although the stochastics are in oversold. So the question is, basically, there's no point being bearish above 56.50, not uber bearish anyway. If that breaks, everything changes. Righto, that's it from me. Have a great day. Back tomorrow. I'm on the road this week, so you won't see the beautiful setup and all that sort of stuff. I'll be in hotel rooms and things like that. I'm covering the Cybos technology conference for Business Insider, as well as doing all of this for you. You'll see an offer come from me in the future, so I can do this full time and work with you and do more stuff with viewers and with readers of my notes and one-on-one clients and all that kind of stuff. Anyway, watch out. Chicago Fed Activity Index tonight. I'll be watching it. I watch it every month, but it's the only thing out, so keep an eye on that. Keep an eye on Brexit. Keep an eye on Italy. Keep an eye on the price action in stocks. That's probably the key to everything right now, both in China during my time zone today and then in the US. All right, that's it. Have a great day. Bye for now.